Greetings, members, one and all of the Salivation Nation. Silver and copper prices mark an impressive recovery from March lows. Whoop-de-doo. I know that's a little bit sarcastic in my statement there. Most of you know that I'm bullish on precious metals in general, and gold and silver particularly, but especially gold. But this is not really that big of news, and it's not that impressive in my view. We're going to explore this article from MarketWatch and find out why. So here the subheadline is at their lowest level in March, silver futures were down as much as 34% year to date. Industrial metal prices have seen an impressive recovery in recent weeks. Silver has erased its loss for the year, and copper is looking to recoup the bulk of the declines it suffered during the peak of the coronavirus pandemic's toll on the global economy. The drop in global mining production from the shutdowns helped buoy prices of both commodities. Notice what they're calling it there, commodities. Says Rohan Reddy, research analyst at exchange-traded fund provider Global X, and the sharp climb indicates the market views the deterioration in economic data being short-lived. Silver futures hit an 11-year low of $11.77 an ounce on March the 18th, down 34% for the year as of that date, with the July contract settling at an $18.03 an ounce on Friday. Prices were up 0.6% in 2020. Now, it's interesting. Let's talk about copper momentarily, because I do think that's an interesting dynamic to compare it, since this is viewing both of them as commodities here. Copper futures were up half a point, meanwhile, fell to the lowest level since October 2016 at $2.10 a pound on March 23rd, which marked a 33% drop from the end of 2019. They've paired that with the September contract, 4.2% lower this year after settling at $2.68 on Friday. Declines in mining production helped buoy prices for the metals, as 2/3 of global silver output and an estimated 13% of copper production went offline during the initial shutdown-related measures, says Reddy. It's harder to bring mining production back quickly, but it is to bring demand back. And part of the demand, and part of what makes this headline maybe partially true, although I think it should be, at the same reason why it is not impressive is because a lot of it is physical demand has increased. Now we've seen that reflected mainly in premiums, not in the spot price. But in my view, it should have never gone down that low in the first place, to $11.77. Now, gold did suffer too, because people were running to cash during this, which is typically what happens, has been talked about ad nauseum in this community. But for silver to go that low, I think is, at this point in time, given where inflation is, I think is highly unusual. And it gives another reason why people are viewing silver not the same way they have in the past. When I'm talking about the past, I'm talking about before 2000 and maybe 15 or 14. I think from 2014 to 15 onward, we're starting to see more and more people kind of lose faith in silver as a hedge. They're looking at it more as a commodity, as it's ever since that time it has really suffered in terms of its price performance and its reflection of value, and also it's a comparison with gold in its ratio, the gold to silver ratio. So in Chile and Peru, which account for nearly 40% of global copper output, coronavirus cases have accelerated and might lead to a second wave of mining shutdowns, he adds. Still, the price drop for the metals in March were severe, with copper futures down over 12% and silver dropping 14%. That got the attention of value investors, both institutional and end users of the commodity, says John Caruso, senior asset manager at RJO Futures. After seeing the depths of the broad-based market crash, you naturally get a synchronized response from global central banks, says Caruso. There's a lot of global stimulus and liquidity being issued to markets that are specifically meant to boost the US dollar denominated asset values. Gold has benefited from that, as has silver, which is both a precious and industrial metal. And that is true, it has a dual role there. Silver's solid price action is driven by its precious metal side, much more than its base metal characteristic. And the low interest rate environment is great for the precious metal, says Taki Saklanos, founder of InvestingHaven.com. And that's true, but I think it should have performed much better than it has. In some ways, that performance is seen by the increased premiums that we've been witnessing and complaining about for quite some time. Except for we've seen a larger gap between premiums that are recovered upon selling the metal as opposed to what we pay for when we buy the metal. A second wave of virus infection probably would put even more fuel under silver's price rally because of the prospects of a long-lived low interest rate environment and inflationary measures of policy makers to stimulate economies, says Saklanos, who expects silver to test $21 before year end. And I'm not so sure about that, which is why I'm saying whoop-de-doo to this price recovery. Copper's outlook, however, isn't as upbeat. The market for the metal could see a 2020 surplus around 200,000 metric tons, says Johan Wiebe, lead metals analyst for the GFMS team at global financial data provider Refinitiv. He believes that copper prices already have seen their bottom for the year, and that attempts to push significantly higher from here will prove unsustainable in coming months due to concerns over a possible second infection wave. Without a second wave or fears of one recede, copper might end the year around $6,000 per metric ton, or about $2.72 a pound, a bit higher than it is currently. Silver, meanwhile, appears to find $18 an ounce a difficult level to breach. That's just why it's not all that impressive. But if it pushes through that, its price might peak around $20 before year end, says Wiebe. And that's kind of where I'm at, too. I think it might still. I think there's hope for silver at $20 before the year end, but that's only $2 more than what it is now. Still very unimpressive in my view. Caruso was more bullish on the rise in prices by year end. His upbeat target for copper is $2.87 to $3 a pound, and he says silver could hit $22 to $25 an ounce, assuming further weakness in the dollar. And that's quite an assumption for sure. But that's just it. Given our circumstances and given what gold is doing in its reaction to the pandemic, silver is lacking poorly. And at this point in time, it is true that silver does lag behind gold. But I would think that by now, after 3 months of this, especially considering what's happened before, that we would have seen some recovery beyond where we're at with the paper, with the electronic prices, with this LBMA spot price. It's not happening. We're back to where we were before, pre-pandemic. And something's got to give somewhere, or it could damage the prospects of a normal gold to silver ratio of around 65, or between 55 and 65, or at most 70 to 1. We may be seeing 85 to 90 to 1 as a new normal for silver to gold ratio. In other words, people aren't looking at silver as a hedge if this continues the way it is. The test of time will truly tell. It's going to take some shock wave to pull people into submission to see silver as money again, as a protection, as an insurance policy. That is what we're waiting for. This recent demand that we've seen the past 3 months for the physical metal has certainly inspired me, and seeing that people to finally wake silver up again, to make silver great again. But it's kind of teetered out, so to speak, with premiums now up, and what you're paying, but compared to what gold is right now, it's still lacking. There's still hope for silver down the road, but how much longer will this take? How much longer do we have to wait for silver to come back in line with gold. And what is going to be the catalyst to get us there? We've already hit a pandemic. Is it going to be this resurgence? We shall find out. Small disclaimer here. Every time I mention the pandemic or the coronavirus or COVID-19, understand that I'm mentioning it with respect to how the market reacts to it. I typically don't want to get involved in a debate on whether it's a hoax or not, or even how the media treats it. I am with many in this community on how the media are treating it and how it has been politicized. There's no question about it. But nonetheless, as a side note, that is just what it is. But the actual perception of the markets is a different thing, and that's what's important. That's what this channel is about. So feel free to post whatever comments you want about the pandemic, but I probably won't be addressing those, either pro or con or what have you, because it's kind of a side argument from the what's going on with the precious metals prices. Because whether or not you believe in it or not, it is having an effect on the markets, not just the precious metals market, but the overall stock market and the financial markets around the world. So we'll see how this plays out, but impressive recovery? I think not. Do I still have hope for silver? Yes, and it is selling for much higher than spot price right now, but we need more people to see silver as an insurance policy, as a hedge, as money. And until we have that happen, I think we're going to continue to see lackluster performance in the metal. Post your thoughts below. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate and please share. And then after that, after you're done with both those things, then comment and then subscribe.